welcome to Property Investment UK. We have a client question today regarding how to finance property purchases for buy-to-lets, and particularly when they're 55 years old. So the question is, at 55 years old, I'm probably a bit late for mortgages. What is the best way to raise finance to buy properties for buy-to-let? Okay, so when it comes to buying a buy-to-let property, you'll need to fund it in some way, shape or form, whether that's a mortgage, buying it with cash, or working with a joint venture partner. You will need to fund it in some way. Now, being 55 years or in your 50s or even 60s does present some difficulties with raising finance. We aren't mortgage brokers, so we can't give direct advice in terms of how it's best suited for yourself. So I'd recommend speaking to a mortgage broker, and you may be pleasantly surprised. There might be some options out there for you that are suitable for your situation that would allow you to raise a mortgage on purchasing a buy-to-let property. Alternatively, if you are looking to grow a property portfolio, but you're not in a position to raise mortgage finance, then I would consider some of the other alternative options on getting started with property or building a property portfolio that don't rely on mortgage finance. Now, some of those particular strategies would be related around cash flowing strategies. So instead of using mortgage finance to buy the property, what you need to do first or initially would be to build up a pot of funds to allow you to buy those properties with cash. Or maybe you do have mortgage products available, but you need to put more deposit. So using a cash flow strategy initially, instead of just going straight into a buy-to-let strategy, may be one option. Below this video, we'll put in some links to some of the cash flowing strategies that may help you achieve this. Another alternate strategy is using something called joint ventures. So this is where you can raise finance to buy a property or build a property portfolio that won't be relying on mortgage finance. Now, this gives you more flexibility because it doesn't matter about what age you are or what experience you have. It's just simply a case of working with an outside or an alternate source of finance, an investor partner, to fund and to buy those properties. Again, we'll link below this video to some of those strategies like joint ventures, so you can have a look at those a bit more in depth and see if it's for you. Alternatively, maybe consider other types of strategies instead of building a buy-to-let portfolio, where you maybe have one deposit pot, and over a period of time that might get left in different properties when you're buying a number of properties to build a portfolio. Maybe alternate strategies like buying, refurbishing and then selling that property on. So flipping properties will allow you to build up a better income stream. It might achieve the same results for you. You might not need to build a portfolio. So what I'd probably recommend is it's not all lost, certainly just because you are 55 years of age or mid-50s, mid-60s, whatever it might be, there are options that you can use to either raise finance or to get started and build a property portfolio that don't rely on mortgages. So I hope that helps, and have a look at some of the alternate links and different strategies and see if any of those are suitable for you. All the best. Thank you for watching this video. If you like this content and you'd like to join our free online property training course, we've got a link for it on this page, and in there we cover a range of different property strategies to help you get started, either building a long-term property portfolio or creating a cash flowing property business. We also look at ways to increase your return on investment with any of the property you may be considering, and we also have a couple of cheat sheets and downloadable documents in there as well. Simply click on the link to join the free training course today.